Hello, welcome in. Today I'm going to take a look at a company called Bloomin Brands, and you may not know that particular name, but you do know the names of the restaurants that it runs. Outback Steakhouse, Carrabba's Italian Grill, Fleming's Steakhouse, and a few others. So the reason I show you these charts is not so much, and I'm sorry, I've got a cat who's trying to get my attention outside the door, and I'm locking him out for a reason because he'd be climbing on the screen. So the reason I show you these is not so much because I'm saying, hey, everybody should run out and buy Bloomin Brands. In fact, I'm not saying that, and I would never say that about any stock. However, it's important to understand how we can use the example of a particular security as a way of identifying the strong points and the weak points and what to look for before you buy. It's really easier to see these in action rather than trying to get some kind of step-by-step kind of thing to look at. So I hope that makes sense. So Bloomin Brands. So we are looking at a weekly chart for this, and I will kind of do some basics today. You can also go over here and take a look at the daily chart. So you do notice a little difference in the bars. You see a closer look here at how it performs day by day. On the weekly, the bars are a little more compressed, obviously. On a monthly chart, you have the very same thing, much compressed, and you get a very accurate look at what happened here to the stock in 2020, of course, as the pandemic lockdowns took effect and restaurants were arguably the hardest hit industry of all. Okay, so you can also, another thing that I do here is I like to use a 5-minute chart to show you how a stock is performing, and you get a nice look here. You see how at the open, this is what is called gapped down. You see that? There was a gap between yesterday's closing price, today's opening price, gapped lower, gapped down again here on a 5-minute basis. You had a few more smaller gaps. Really, the 5-minute chart, I like to show you the intraday kind of trading. But if you want to get a sense of how the patterns are performing, just a better 30,000 foot view, a weekly, a daily, or even a monthly can give you a better sense. So Bloomin Brands, go back to a monthly for a moment, went public back here in 2012. So it's still in that newer part of its trading history, okay? And in the first 15 years or so that a stock is public, that is when it tends to notch its biggest price gains. And people worry about wanting to get into an IPO the first day and they freak out. That's just silly. You have years to get into a new stock and still participate in the potential biggest gains. Okay, so right now, what are we seeing here on the monthly chart? This obviously was 2020. This is each month as it clawed its way back, okay? And you see several months in a row here of upside trade as the business case became better. Vaccines, reopenings, let's see. I think that month, that was February. So yeah, there was the big gain up here in November. And that was vaccine month, if you recall, when the first ones were announced that they would be distributed. Then over time that grew. So what's happening now? So right now the stock is it's down, was 10% when I looked last for the month of May. Now it's down almost 12% for the month of May. So we've got some challenges ahead, right? We've got rising commodity costs, which means rising expenses for Bloomin Brands and every other restaurant and frankly most other businesses at this point. So that's a challenge. That would cut into their income. And sure, might they raise prices to pass those along to consumers? Yes, but it's still going to be a headwind. You might have rising labor costs. Now, this company actually did a little better in terms of not furloughing any workers during the pandemic, and therefore they have a more loyal workforce right now. So they've done a great job. That's going to reduce turnover, reduce the headaches of hiring, and frankly could result in some better service because you might have kitchens and dining rooms that are properly staffed. I mean, how about you? I've been to some restaurants lately where they're clearly understaffed, and I get it. I understand there's many reasons for this, why people are not back in the workforce. But I think perhaps because of the fact that Bloomin Brands did not furlough anybody, you might have a little better experience when you go into one of these places. Okay, so the company reported earnings. I'm going to go back to a daily here. Reported earnings back here. And you see you had a big gap up. It's talking about gaps. Gap up of 8.92% on April 29th after the company reported its quarterly earnings. Let's go back here. We can take a look. We had sequential quarters, third sequential quarter of revenue growth. And we're practically back to this March 2020 quarter. Now, if you recall, the first couple months of 2020 were basically fine, right? And then the pandemic closures hit in March, so you did have a big hit in that month. So we're pretty much back to where that is. And really, look at this, back to September 2019 levels, above September 2019. That's very good for them. Earnings per share, 63 cents, up 350% from a year ago. You did have some losses rather, and an earnings decline in the December 2020 quarter. It's been rough, there's no question. But again, the markets are a forward-looking mechanism, and there has been optimism all along about the reopening play. And, that just is reflected here. Okay, for the year of 2021, analysts expect earnings per share of $2.20. So obviously that's going to be an improvement over last year. And for 2022, $2.43 a share, up 10%. By the way, I know I had the cat a minute ago. My neighbor is getting a new roof, so they're moving all kinds of equipment. There's a truck out there, a huge flatbed truck outside, moving sort of pallets of roofing materials out there, just in case you hear that. I don't know if you can, but I can hear it. Okay, so what are some of the things to look at on a chart? Well, for one thing is you don't want to buy at this juncture. Think of the old phrase, like trying to catch a falling knife, right? You have right now, this stock is well below its 10-day moving average. It's below its 50-day moving average, continuing to fall. Look at this. It's right at the bottom of its trading range for the day. This is where it's a little bit helpful to go back to that 5-minute chart. And you can see trending lower, attempted a little uptrend here earlier in the day, trending lower. So really, it's very, very near the bottom of its trading range for the day. And again, to come back and look at it now on a weekly, put it in a little bigger context, you don't want to be buying at this juncture, okay? It's not getting support at key moving averages. What you would like to see, back to the daily, and I do this, I bounce around between the different charts. It's just very, very helpful, and you can do it with a click, so why not? Now, if the stock continues to find support right here, kind of near that 50-day line, that could be an encouraging sign. I'm not so sure that's going to happen, though. And I'll show you why. Let's take a look at the Nasdaq Composite. And we'll just take a look at what's happening here. Nasdaq Composite has also been getting slammed in roughly the same time frame that we're looking at for Bloomin Brands. 3/4 of stocks do tend to follow the broader market's direction. What are the stocks that tend to drive the market? Well, let's take a look at a few of them, shall we? Here is one we all know and love. Okay, we all know it anyway. So this is Apple. And you see that Apple has fallen to its 200-day moving average. So that's the largest stock. That's the largest of the large caps, heavily weighted in the S&P 500, heavily weighted in the Nasdaq Composite, most heavily weighted. So that is going to have an impact. Here's another one. Okay, let's take a look at Microsoft. Same thing. Microsoft, which is, I think, the second biggest stock in here. Also correcting, not as much as Apple, but also it's heavily weighted, it's leading the market down. Now let's take a look at another one just from the perspective of the S&P 500, which is the index of the largest U.S. companies. So this is Exxon Mobil. And what's interesting about this, you are seeing it perhaps forming a cup with handle pattern here. I don't want to dwell too much on this one. You know, you've got the Colonial Pipeline shut down. You've got some reasons here why energy prices were set to rise anyway prior to that. So you're seeing this one is perhaps mitigating some of the downturn in broader markets like the S&P 500 right now. But you always need to look at what's happening with the biggest stocks. What are the trends driving the market direction? Let's come back to little old Bloomin Brands here, which is actually, it's categorized as a mid-cap stock. It's got a market cap of $2.49 billion. So it's not really a very big company. It's funny because a lot of times these names you're familiar with, you know, like Outback Steakhouse, Fleming's, Carrabba's, all these restaurant brands that the company owns, it may not mean that this is this huge company. It's not, even though it's publicly traded. So no, is this one going to have an impact on the broader market? No, absolutely not. Is it going to follow the broader market? Yes. Are investors going to be concerned about trends like inflation, like rising commodity prices? Absolutely. So you've got a few different, you've got sort of a headwind right now, a couple of headwinds in the face of the market itself falling and in the face of rising commodity prices. You've also got a tailwind though, right? In the face of more people being vaccinated, restaurants being open, it's kind of looking like this summer more and more restrictions are going to be loosened up, including perhaps mask mandates. So things are looking good on one sense, but a little nervous making on the other. All of that lends me to say about this and about most stocks at the moment, you want to be careful at this juncture just because of the market direction itself. And I'll just be keeping a close eye on this, publishing videos for you. And when the market direction does turn higher, I think that's going to give us a fresh crop of stocks that we can look at with new eyes. So that's my look at Bloomin Brands today, along with a little detour into the broader market, but you always have to take that little detour to put your stock in context. All right, thanks again for watching. I appreciate you.